Welcome back to FT Markets. Russia is rising again on European politicians' worry lists and threatens to overshadow this week's EU summit in Brussels. But are markets taking proper account of the risks involved in the standoff over Ukraine with the West? With me to discuss this is Tina Fordham, who's Citi's chief global political analyst. Tina, welcome to the Financial Times. A striking feature of equity markets this year has been the strong performance of Russian equities, if we see in our first chart. Until very recently, they were outperforming Europe and the S&P. Do you think markets are getting Russia wrong at the moment?
Well, I think that markets took as a very positive signal Minsk II, and there were...
So the ceasefire agreement.
Yes, the ceasefire agreement. You saw the heavy artillery rolling back, and there were real hopes that this would be durable, and more importantly, that enforcement of Minsk II would mean that EU sanctions would be rolled back in June when they are set to expire.
Okay, but we have threat of more sanctions. We also had this rather extraordinary disappearance of Putin for a few days. What do you make of all that?
Well, we've had a confluence of a few factors in the last several weeks. Most recently was Putin's disappearance for 11 days. As of yesterday, he's back on the scene, and he laughed it off, saying that life would be boring without gossip. But his disappearance raised big questions about succession. What if Putin hadn't come back? What would have happened constitutionally? Or was there something perhaps more sinister at work in terms of elite divisions?
It's very difficult for markets to make sense of that, to price it in. But I mean, are there things that they should be worrying about more than they are at the moment?
Well, I think that the disappearance is possibly a red herring. I think the more important development, which again did not really weigh on markets, was the assassination of Boris Nemtsov in late February and the aftermath of that.
Yeah.
Yes, the opposition leader, not necessarily because he ever represented a likely future president of Russia, but because his killing within yards of the Kremlin so prominently really seems to have exposed divisions within the Kremlin elite after 15 years when we didn't see these kinds of exchanges.
When we have political risks elsewhere in the world, Greece, US fiscal cliff, Scottish independence referendum, markets tend to ignore them, assuming that the worst won't happen, or if it does happen, they can't really price it in. Could you take the same sort of attitude towards Russia?
Well, one of the ways to think about what might happen this year is in terms of signposts, right? So EU sanctions set to expire in June. That also happens to be when tensions around possible Grexit or renegotiations for Greece are likely to come to a head. And one of the things I've observed after looking at political risk in financial markets for so long is that very often it's not the political risk itself or the scale that risk represents, but the timing and when it happens relative to other factors in the market. So those two worries together could really destabilize.
Let's look at our second chart, just showing the broader point that it's an oil story going on, particularly with Russia the most extreme example, but this amazing fall in oil price we saw last year, creating political instability elsewhere in the world as well.
Well, I think it was always going to be a big theme of this year that lower oil prices were going to hit weaker petrostates with more impact. And those that have both sanctions and a high break-even price and perhaps a somewhat brittle political regime are really starting to demonstrate that.
We talked about signals earlier. Very important signal, of course, is Putin's approval-disapproval ratings, which we've illustrated in our final chart that you brought along today, showing really that quite extraordinary surge in approval this year. That's crucial, isn't it, to what happens next in Russia?
Well, absolutely. And one of the factors that we would look at is any rapid deterioration in approval ratings. There is a lag time between when living standards might start to go into reverse and when we'd expect to see a negative turn in approval ratings. But Putin's coming from a very high base. I would take that, though, with a grain of salt. Because of the way that polls are conducted in Russia and the absence of an alternative. And of course, what they really reflect is the very high popularity across all segments of the Russian population with the Crimea annexation.
But possibly vulnerable to a fall.
Nothing lasts forever.
Tina, we'll have to stop there. Thank you very much. So, strong approval rating still for Putin, but markets should be aware of those deeper political risks, not just in Russia, but elsewhere.